Virgin Australia entered voluntary administration on the 20th of April, owing over $6.8 billion to 12,000 creditors. But the big question is, how did this happen? And whilst COVID-19 was the catalyst, there were pre-virus factors that set it up for a fall during the pandemic. First, let's compare some of Virgin's finances with Qantas, its main competitor who hasn't entered administration during COVID. Virgin has only made a full-year profit after tax twice in the past decade, whilst Qantas' only loss was in 2014. Qantas also holds over 60% market share of Australia's aviation market, whilst Virgin holds 32%. And finally, Qantas consistently has around 3 times more revenue than Virgin's, giving them more financial security. And these numbers ultimately highlight the substantial lack of financial flexibility that Virgin has during COVID-19, and ultimately how they have less money to pay back debts. The airline was born as Virgin Blue in 2000, a successful low-cost carrier once termed as the fastest-growing Virgin company in history. But in 2011, the company announced a new name, becoming the Virgin Australia we know today and a full-service airline by 2012, shifting its target market to corporate and business class flyers despite losses. Neil Hansford, Strategic Aviation Solutions Chairman, detailed to news.com.au that they essentially took on a war they didn't have without the soldiers or the ammunition to fight it. They tried to be the Qantas alternative, despite their lack of finances in comparison and consecutive end-of-year losses. So what's exactly in their debt? You can see some of the figures here, but the bottom line is that they borrowed billions of low-cost money to fund the transformation and expansion. The Australian reports that lenders relied on the willingness and ability of its 4 biggest shareholders, all foreign airlines, to come to the party in a crisis. But this ultimately didn't work out. Just 6 months ago, Virgin spent $700 million to buy back 35% of its Velocity frequent flyer program, which shareholders refused to fund with equity, according to the Australian. And, before it went to administration, the AFR already reported that they passed up on recapitalizing the airline, which had to open up an equity search outside investors. But of course, it's arguable that without COVID-19, the company would have never gone into administration.
The worst is yet ahead of us.
The crisis for airlines is deepening as more countries close their borders to foreign visitors, and carriers worldwide are being forced to make sharp cuts.
Virgin tried its best to deal with the situation, saying down 8,000 staff, closing Tiger Air indefinitely, and scrapping all but one domestic route. But with the global aviation industry forecasted to lose $493 billion due to travel restrictions and government lockdowns everywhere, combined with existing debt and past losses, the airline was especially vulnerable, leading to voluntary administration. Nevertheless, Virgin Australia is a great airline, and to everyone at Virgin, I hope you're staying safe and well, and that we'll see you in the skies again soon.